Ever been in a situation where you needed quick cash but did not want to break your investments? Well, today we are diving into a fascinating trend that's reshaping how India borrow money. It's a story that starts with RBI raising eyebrows and ends with a game-changing solution that could transform your financial toolkit. Let me paint you a picture of late 2023. The RBI was getting seriously worried about something unsecured personal loans were growing at whooping 23%. That's nearly double their usual pace. We are talking about credit cards, personal loans, the kind where you don't put in any collateral. Now, why was this a big deal? Well, imagine lending money to someone with nothing but their word as guarantee and charging them anywhere from 9% to 40% interest. That's exactly what banks were doing, and they were doing a lot of it. If borrowers could not pay back, well, tough luck for the banks. They did have to chase them down for recovery. And here is a plot twist. So, the interesting thing is, RBI stepped in and tightened the rules around the unsecured loans. Classic case of closing one door and opening another. Because guess what emerged from this crackdown? Secured loans, particularly ones backed by mutual funds. Now let me blow your mind with some numbers. India's mutual fund industry has been explosive growth. We are talking about going from 10.51 trillion to 66.93 trillion rupees in just 10 years. That's not just growth, that's a revolution in how Indians think about their money. So, there is LAMF solution. So, loan against mutual funds enters our story. Think of it as having your cake and eating it too. You got a mutual fund investments, they are growing nicely, but suddenly you needed cash. Instead of breaking your investments, you can now use it as a collateral. Here is how it works. Let's say you got 5 lakhs in your equity in mutual funds. Banks will typically let you borrow up to 50% of that. So that's 2.5 lakhs you can access without touching your investment. And if you got the debt mutual funds, even better, you could borrow up to 80% of their value. The best part is the interest rates were surprisingly reasonable. We are talking about 8 to 11%. Why? Because banks know they got your mutual funds as backup. So this is a win-win scenario. Now here is what makes this really clever. While you are using the loan, your mutual funds keep working for you. They're still invested, still earning returns. It's like having a backup generator that powers your house while also mining Bitcoin. And if for some reason you can't pay back the loan, the bank simply redeems your mutual funds to recover their money. No damage to your credit score, no midnight calls for recovery agents. So what we are seeing here is really fascinating. It's financial evolution in action. As traditional lending gets tighter, the market finds new ways to meet people's needs. And with platforms like many fintech startups, the whole process digital and instant, we are looking at the future of personal finance in India. Remember folks, this isn't just about having another way to borrow money. It's about smart borrowing that protects your long-term financial goals while meeting your short-term needs. That's all for today. If you found this interesting, don't forget to like, subscribe and share with someone who might benefit from knowing about the financial tool. Until next time, keep investing wisely. Thank you very much for watching this video. Till then.